Interest rates have been abnormally low for a long time. The Fed has started to increase them. What we're hearing is the Fed's going to continue to increase them. A lot of people don't understand how that affects anything. So tell us a little bit about what that means for your average consumer out there that's looking to buy a house.
Sure. So the interest rates have been slashed, and as you said, have been almost at zero as far as the overnight lending rate for a very long time. So that has caused mortgage rates to be extremely low, historically low. That's not the norm. And there are a lot of other good things that happen when interest rates rise that a lot of people don't realize. It's a sign that the economy is getting stronger. When the economy is stronger, housing prices increase. Obviously, as a homeowner, when housing prices increase, that means your net worth is increasing as well.
Sure.
There is a lot of panic about hurry up and buy a house today because the rates have never been so low. And what I would say to that is no matter what the rates are, it's a good idea to buy a home because over the course of time, measured in years, there's really not a better investment than owning real estate. So even though interest rates are rising, the difference in 0.25% on $100,000 is maybe $12 a month. However, it is a good idea to get in now because that $100,000 house may increase in value, and 2 years from now, that same house may sell for $130,000, and that's going to be a bigger jump in your payment than the rise in interest rates will be.
Right. So, do you think, no one has a crystal ball, but do you think that rates are going to continue to rise?
I think they will because they need to. They're not going to, you'll hear some people saying that it's going to rise 5% in the next year. That's not going to happen. Again, I don't have a crystal ball, but the other effects of that would be catastrophic in a negative way if they rose that quickly, that fast.
Sure.
It's going to be a steady increase, but so are prices as well. So if you buy now, you're going to be on the train, if you will, to those rising increases. So if you buy now, 2 years from now, when the house that you bought is worth $150,000 and it's now worth $180,000, that's $30,000 of equity that you've just gained for just simply making a housing payment.
Right, and you got to live somewhere.
Absolutely, you always got to live somewhere, and I always say it's better to pay your own mortgage than to pay someone else's mortgage.
Absolutely. So, your advice to anybody that's out there that's on the fence, that's looking around, is rates are still low. We know they're going to go up. Prices, we're starting to see price increases. So if you're thinking about buying, now is probably the perfect time.
It is. I mean, it's always a good time to buy a home if you're ready, but now there are other factors that really make it optimal.
Sure.
Prices are continuing to rise, and as you said, rates are still low, so you can get a lot of home for the money, so to speak. And for the first-time home buyers that are wary or on the fence because they're not quite sure about your credit, it's always better to know where you stand than not. So if you get pre-approved or you try to get pre-approved, if you're not able to get pre-approved just yet, a lot of lenders will tell you what you need to do to get your credit to a point where you can buy a home.
Well, hey man, thank you for your insight and giving us some information on where you think rates are and what's going on in the market.
You're welcome.